We're going to begin building a trade using the 6-step process. In this lesson, we'll start building a trade using step 1 of our 6-step process, setting the curve. Setting the curve begins our process to identify a trade opportunity. Let's remember the importance of setting the curve, which is to outline a range of wholesale to retail prices in order to gauge the likely boundaries of trend reversals. As you see in the flowchart on the lower left, the first step will outline the playing field for the rest of our trade setup. In short, we'll set the curve by finding a high time frame demand zone and supply zone and dividing the range between the distal lines of the supply and demand zones into thirds. Let's go through an example. You can see there an example on the lower left. Make sure that when you begin your analysis, you are on the respective high time frame, which will be based on your investment objective. So again, if you're looking for monthly income, then your high time frame would be a monthly chart, so on and so forth. Now that you have your high time frame going from right to left, identify the nearest quality demand zone. It needs to be the first demand zone below current price that meets all three qualities of strength, time, and freshness. The zone structure odds enhancers. Remember to use the 5-step zoning process to identify and qualify a quality zone. Once you identify a quality demand zone, the next step is to find the nearest quality supply zone. Using the 5-step zoning process, go up and to the left to find the nearest supply zone that meets all the qualities of the zone structure odds enhancers, strength, time, and freshness. Now that we've identified both of the nearest quality demand and supply zones, we want to divide the range defined by the distal lines of those zones into thirds. The top portion of the curve is the high range curve, which represents expensive or retail prices. The bottom portion of the curve is the low range curve, which represents underpriced or wholesale prices. Between the two is the mid-range curve, where price is considered in equilibrium. It is neither high nor low. In this lesson, we identified how to set the curve by identifying quality supply and demand zones on the high time frame and dividing that range into thirds. Next, we'll add in step 2, checking the trend. Before you move on, choose a chart in your preferred trading platform to perform the entire 6-step process. Step 1, set the curve on a high time frame. Identify the nearest quality demand zone utilizing the 5-step zoning process. Then identify the nearest quality supply zone, also utilizing the 5-step zoning process. And finally, divide the supply and demand zone range, which we refer to as the curve, into thirds, from the distal line of the high time frame supply zone to the distal line of the high time frame demand zone. Hope to see you in the next video.